Let's get more on this. I'm joined now by Anne Berry. She worked at Goldman Sachs for 11 years and is now Chief Investment Officer at Wheelhouse. Anne, I'm not sure if you were listening to the conversation we were just having, but I want to get really your sense of how you're reading this week's market moves. Do you expect markets to remain volatile?
I do, and I think that's really a function not so much of what the Fed's doing, but more continuing to track the impact of COVID on things like supply chains, continuing to track whether the US labor force is going back to work in full, which is partly a function of some of the short-term stimulus, and also looking too at what some of the earnings trends are and what real shifts in consumer behavior there are. So volatility, but really because I think now we're moving to a period of coming to an end of a reopening transition and moving to look at what some structural changes that could be more long-term might be.
Yeah, that makes sense, because I suspect really the difficulty in all this is knowing whether inflation is fleeting, you know, mainly because they're trying to predict what the economy will look like post-pandemic. It's almost like an impossible job here.
I think it's impossible, and I'm going to be a Fed apologist. I think they've done a very good job. We had unprecedented depths of shutdowns at unprecedented speed. We had a completely unpredictable path to reopening, which has now happened really in a snapback in huge swathes of the country here as vaccination rates have come up. This is totally uncharted, and I think the Fed has said we're going to watch, we're going to wait, we're not going to have knee-jerk reactions, and I think they've done exactly that. They've watched and they started to signal now that they will move if they will have to.
I would love to get you switch gears and really get your thoughts. You know, you spent 11 years at Goldman Sachs. I'm sure you heard about James Gorman's comments, the CEO of Morgan Stanley, who said yesterday, the day before yesterday, if staff can go out for dinner in New York, then they come into the office. How is that stern message, you think? How would that be received?
I think it will be received a little bit differently depending on which audience is receiving it at the big banks. I think certainly at the more senior levels, there was a sense that folks had undertaken the apprenticeship I did. I was always in the office as a young person learning the trade, different perhaps from some of the folks who are more recent hires, where this period through COVID of working from home is in many ways sort of the normal that they've experienced. I think on this one, having grown up in financial services, learning the trades is a little bit like playing jazz. You need to learn the instruments and you've got to learn to improvise with people. It's quite hard to do that if you don't know other people's cadence, at least at the outset. And I think that's what the banks are focusing on, getting people together to learn each other's cadences and their teams before perhaps being more flexible about dispersing again.
Yeah, it's probably difficult to do it via Zoom. I want to listen to this. I spoke to Kate Lister, the president of Global Workplace and Analytics. This is what she said about working from home. Take a listen.
80% of the workforce says they want to work from home at least some of the time. And a third say that they would quit if their employer didn't allow it. We're already seeing in our clients people quitting because the organization hasn't declared what they're going to do.
So, Anne, I mean, she also told me, Kate, that the banks were facing a rude awakening. Do you think banks fear losing talent because of this?
I think banks have had to wrestle with other places that talent can go for quite a long time, whether it's been in tech. That's been a debate that's been around for quite a while now. And certainly in the industry I'm in, which is where content and commerce and tech come together, it's a very intersectional place. There are different levers on quality of work life beyond working from home. It's about how interesting is the work, how much creativity is there involved in the work. I think through COVID, people have taken stock and asked what really motivates them. I don't think it's just about stay at home. I think the banks will have to think about what are the different levers they can pull to retain great talent.
You know, being in New York, you probably, and given your financial background, you probably got your ear to some of those who are still working very much on Wall Street. Are they seeking, from what you're hearing, Anne, are they seeking a culture change here? Putting aside the financial aspect and what bosses want, from an employee perspective, do they want to see a change or some sort of flexibility here when it comes to working from home or being in the office?
I think there's been some generational change for sure. I've spoken to some young people who are in industry. And while some of them have enjoyed working from home, others have said, you know what, Anne, I basically live at work. There's no space, either physical or from an hourly perspective, between the time I get out of bed to the time I hit my laptop and start doing my work. So I think in theory, folks are looking for flexibility, but they're looking for community, and they're also looking for some real life interaction with peers and have those relationships build at the same time.
It's such an important point, Anne. It really is a personal choice isn't it? It's not, it doesn't fit everyone to apply by the rules, but you make a very important point there. And Barry, great to have you on the show. Thanks very much.